So the company's principal financial services subsidiaries provide critical products and services for the benefit of society. We help people plan and save for retirement. We protect people and their families from various risks, such as unexpected healthcare costs, disability, death. We help people live in comfort and security during their retirement years with a variety of products, such as guaranteed lifetime income. And the need for these products and services is going to continue to grow, we believe, but it will evolve with population growth and changing demographics. The industry is going through, however, a period of rapid change. It's driven by heightened client expectations, fast technological changes, and rapidly changing regulatory expectations. We believe that we will be well positioned to meet the changing clients' needs well into the future, so long as we embrace change, make the necessary investments to transform our businesses, and continue to put the well-being of our clients at the center of all of our decision-making and our actions. The environment we've been operating under in the last few years has created challenges to growing our profitability. Numerous factors have contributed to this. We're basically still impacted by the consequences of the financial crisis some 8 or 9 years later. Since the crisis, central banks around the world have pushed interest rates to record low levels, and insurance companies make long-term promises to their clients who basically invest their premiums to keep those promises. And when interest rates are held very low for long periods of time, that squeezes our profitability. A little bit like pension funds. We're in the same boat, long-term investors using fixed income markets to honor promises. So regulators also have responded to the financial crisis by demanding that financial institutions hold much higher levels of capital and that they create much more robust risk and control oversight functions. And while these measures have surely strengthened financial institutions, they've also resulted in much higher operating costs and higher capital levels, which has hurt profitability and returns on capital. The other thing of the crisis is that since the crisis, financial markets have tended to move more in tandem than they did previously. So an example would be when the whole market is focused on risk, or at another period of time the whole market is feeling optimistic, security prices have tended to move much more in tandem, and even whole asset classes have moved much more together in tandem than they did prior to the crisis. So this has provided an environment where active management has struggled to beat indexes, and lower cost passive alternatives have come to the fore, which has contributed to pressure, one of the things contributed to pressure on the fees and margins in our business. And then finally, our clients are increasingly expecting to be served digitally, which is to say however and whenever they want. And they usually don't expect to pay more for this capability. In fact, they usually expect to pay yet less. So this has created a need for us to invest heavily in people and in systems and to manage enormous internal transformations. But if established businesses like ours don't change to meet our changing client expectations, there are many competitors who will gladly take our place, including many fintech startups. So we are facing all of these headwinds, and they are the reality of the day. But as we face them, we remain very optimistic about our prospects for future growth. Across many of our businesses, we've already made investments to enhance our client experiences and the quality of our products and services, and I'll talk about a few of them today. And in many instances, we are seeing growing sales and market shares as a consequence. Our investments in transformation are also starting to go through a different phase. We are starting not only to focus on client outcomes, but we're also focusing on reducing our costs, and it's necessary that we do so. This will remain our focus because we've gone through 3 years or so where our costs have grown at much higher rates than they had historically, and certainly much higher rates than are sustainable going into the future. I think as well as we go through the rapid change in the industry, there's going to be increased opportunity for consolidation in a number of the various businesses, particularly our non-Canadian businesses. And as you know, we have sought to pursue opportunities to drive scale through acquisitions throughout our history, and that will remain a key facet of our strategy. I think we may be entering a post-crisis phase as well, where interest rates start to come up and where the value of active management is more highly rewarded. It's still too early to make that call, but we've certainly seen evidence of that over the past 12 months. So as we look at all of these opportunities and challenges, fortunately we do so from a position of strength. Our strategy has always been to build leading businesses wherever we operate. We have millions of clients, in fact, over 30 million clients in Canada, the United States, the United Kingdom, Ireland, and Germany. We're very strong financially, and we have scale. An example of our scale is we have $1.4 trillion of our clients' money under our packages, under our different platforms, under administration, and about $800 billion of that is actually managed by our portfolio managers. So those are assets under management. We have strong distribution networks. We have over 20, in fact, distribution platforms across our various geographies, and we have thousands of financial advisors who partner with us to better serve their clients. Within the companies, we have engaged employees, and we have experienced and energized leadership teams. Our group companies provide financial security and peace of mind to millions of people through various retirement, investment, and insurance solutions. And those solutions are provided through one-on-one relationships with advisors and through workplace programs. We basically have the capacity to provide solutions to many of the financial needs that our clients will face over their entire lifetimes. And we're investing heavily to meet rapidly changing needs in a very dynamic market. But we're very secure as we make these investments in our belief in our future, because by continuing to put the interests of our clients at the center of our decision-making, we know we will build on our leading franchises and add to the 30 million individuals whose needs we already serve.